One of your guests, can't recall who, recommended CSP, Cooper Standard Holdings, up 44% since then. Please thank them for me. I said, of course, it will be an honor, so I'm going to do that. Arbor Financial President Jeff Small is with us now. Jeff, congratulations, my man. A grand slam. Are you still long?
I'm out of CPS at this time, but I want to congratulate that investor for listening to thinking outside the box mentalities, because we saw a lot of potential in that holding earlier, and it's rewarded him handsomely if he's still holding.
Absolutely. Now, I think that same day you like Disney and Meta. They've been getting somewhat clobbered. Are you still a buyer of those?
I'm definitely a buyer at Disney at a 55% discount here. Iger's going to get costs in line. Their parks are up 36% next year. That pace isn't going to change. Orlando is packed, Charles. As far as Meta goes, I think Meta is really undervalued right now by about 31%. We know their revenues are going to grow this year. The question is, what's going to happen to their bottom line? Is Zuckerberg going to keep spending, and we're going to see their profit decline again? So if they can keep their profit in order with layoffs, look for Meta to pop another $30. But I'm a hold on Meta right here.
Okay. I know in your note, your most recent note that I saw at least, you say stay away from small caps, emerging markets, and consumer discretionary. What is it about those niches?
Well, I think those niches are more directly correlated to what happens in the economy. And, the economy is not just domestic, but it's global. So we're going to see the markets really haven't priced in the recession yet. And I see new lows on the horizon. So I want to caution all investors to gradually dollar cost average into the positions that we're discussing today, or positions that you think are undervalued that have the same type of growth potential. And so in those realms, Charles, we think they're going to be adversely affected when the recession takes hold mid-2023. Whether that recession is moderate or less moderate and more of a soft landing, there are still positions that should be avoided.
You like Microsoft and Apple, which is intriguing because now, they got all the rest of the so-called FANG group, and they've been coming after these. A lot of people saying Apple's done, Microsoft got a downgrade, but I guess they got them right where you want them then, huh?
They really do. They've been beaten up pretty good. Microsoft is down 31, Apple's down almost 30%. That's worse than the NASDAQ. And I think that as a value stock, Microsoft is a better position right now from a fair market value perspective than Apple is. But, Apple, come on, you can't go wrong with Apple at a discount, right, Charles? It's a great stock to hold long term. And all of these positions you're looking to hold for, longer than a year to maybe 3 years.
Jeff, I got to tell you, I own them. I put those on a shelf. I forgot my costs and everything else. And if they dip them too much, I'll go right back in. I'm still relatively young, but I got 30 seconds with our segment. So let me ask, because you talk about becoming wealthy in the stock market, the key to that, what is it in your opinion?
Well, I think the key is to not fall in love with the stock, but modernize your money to reflect the stock that's got the most potential. And there's lots of undervalued positions out there. Baba is one of them. That's probably the best buy out there right now. You can buy it at 2014 almost IPO price. They've had an 800% increase in revenue and a 500% increase in profit. That's a company you definitely want to own. Even Buffett owns Baba right now. But out of all the stocks we've talked about, that's the one that's been beaten up the most.
Yeah, I think Buffett bought $4 billion worth of that stock in the third quarter. So not a bad person to follow. Jeff, you're not too bad either, my man. Thank you so much. Appreciate it.
Thank you, Charles.